What's going on? Money Morning Live. Vaz just let us know that Tom Gentile is up next with Power Profit Trades. We have a half-hour session today. Things are changing up a little bit, and Tom is going to fill us all in on what it's going to look like. I'm excited to bring him in 5, 4, 3, 2.
Hey everybody, Tom here. August 15th, Power Profit Trades. We are going to be doing some changes. I'm going to a half an hour, folks. I realized that when I did an hour of the show, I could actually dial us down to a half hour and what I think is the most important part. So it's going to be more information, more meat and potatoes to you. Obviously, this is great on both accounts because I'm just going to get right into it. We're not going to talk about the Dow, what the Dow and the S&P and the Qs are doing, unless we have a trade opportunity. All right. What I want to focus on, and Eric, throw the screen up on the board. This is my Monday, Tuesday, Wednesday. We're going to focus on stock patterns on Mondays. We're going to focus on options patterns on Tuesdays. And I'll hold Wednesday to crypto patterns only. So you'll get that microcurrency content. That's going to be on Wednesday's show. Today, I want to kick off the week with some of my very first trend signals. And we're going to talk about trending trades today. We'll talk about the trend. And I want to morph you into one of my most popular ways that our members are trading right now. So before we get going, Eric, how's the weekend?
Oh, the weekend was great. It was a nice weekend. Nothing to write home about, but it was just nice and calm. And I'm excited for the new show format. We're like you said, we're mixing it up a little bit. I can't wait to see how it all goes. Hope that the community likes it, and I guess we'll find out today. How was your weekend?
Yeah, well, I think it's going to take a couple of days to get used to going from an hour to a half hour. But sure. Yeah, I mean, you know what? I'm not going to have a whole lot of time to just kick back and chill with you and talk about what's happening in New York or Florida or whatever.
You got to get to work. You got to get to work, Tom.
Right into it. So, for those of you that are watching right now, whether you're getting us live here, or whether you're simulcasting on YouTube, or whether you're catching this on the rewind, I want you to think about yourself as a trader. When you got started, all right, how much you know right now, and how much you need to know going forward, right? I'm not saying that I've been here longer than anybody. Lord knows I haven't. I have been trading since 1986. That's when I first started getting into trading. And I don't even know if I say I was actually trading in 1986. I was trading here and there, all right? 86 and 87 were the first 2 years, 1986, 1987, first 2 years that I started trading. And that was really kind of the dip your toes in the water. And I got to tell you, I was doing two things really wrong when I started. I was literally watching TV, and I was listening for the people that had the most passion in what they were where they were looking at. What I did not know back then, and I'm telling you, everybody watching this program right now, you were at a point where you didn't know what I didn't know, and that was that these people that were on mainstream media did not have skin in the game when they were talking about stocks and they were talking about commodities. Didn't have skin in the game. And at the time, they did not report that they didn't have skin in the game. I mean, you take a look at analysts today, and analysts will talk about what they're long and what they like. And right beside them is about 20 different reasons why they don't own it. The family doesn't own it. The friends don't own it. The dog doesn't own it. Nobody they know owns it. Okay? That's a disclaimer. So I realized closer to now than then, that I was getting information from people that had no skin in the game, right? So my career was quickly terminated, right? Short-term terminated in 1987. October 19th, 1987 was the day the stock market crashed. October 20th, 1987 was the day my account crashed because it went into negative. And so I had to take a year off. I had to decide whether I really wanted to do this. And so 88, 89, maybe part of 90 are what I call the rebuilding years. The rebuilding years were the fact that luckily I had, I was actually coming out of 1987. I was 22 years old. So, I still had plenty of time to make this decision. And I decided, okay, I'm going to figure this thing out. I'm not going to jump in right away. I'm going to take my time and I'm going to learn what it is that I need to know. And the first thing I learned was you want to trade the long term. You want to start trading long term. All right. I didn't really understand why at the time, but the long term was really an investor. I started getting into fundamentals. I started looking at ratios. I started looking at PE ratios. I started looking at revenue. I started looking at earnings. I started looking at trends on fundamentals. And then I realized not long after is that I truly was an investor at the time. I wanted to be a trader. So in 1990, I started looking at technical analysis. I think Metastock was the first piece of software I ever saw, and I put it on a DOS computer, and I started looking at Metastock. I started looking at what I call the very first type of technical analysis software. And I started looking at what I thought at the time was rules-based trading. Just because you're a technical trader does not mean you're a rules-based trader. When you see a technical piece that comes together, you go, oh, that looks good, I want to buy it. You're not a rules-based trader. You're trading off of a chart, right? In order to be a real, true to life rules-based trader, you have to have had a set of rules exactly when you're getting in, exactly when you're getting out. You will have wanted to back test this for years to determine whether it even worked, maybe even do some forward testing, okay? So during that time, I then decided to quit my job and move to New York and trade I was actually on the American Stock Exchange, all right? I worked for a firm on the American Stock Exchange. I was what you would call a floor runner. A floor runner was someone that took information from the desk and ran it down to the floor or signaled it into the floor. And so that's what I did. I was not a floor trader. I couldn't be a floor trader at the time, even if I wanted to. The reason why is because, look, Eric, I might look 6 feet tall right here. I'm not. You know, I'm 5'6", 5'7" when the hair's higher. That's what I am. When your average floor trader is 6 feet, they don't just welcome you into the floor with open arms. You're starting in the back. And if you're in the back, everybody else is 6 feet. You're not seen in the middle. I couldn't have done it, even if I wanted to. Here's the other problem I had. I don't have a New York accent. Although that might have been a good thing for me. I didn't think of it at the time. But if I was yelling out buy or sell with this kind of throaty voice coming out, that might have stopped traffic, as people would have turned around and said, who the hell's this guy? Anyway, so wasn't a floor trader. What I was doing on the floor was learning what the floor did. What was the purpose of the floor? And I went from being a really long-term trader to what I saw, which was short-term intraday 20-second moves, right? But I also learned what not to do. And that's exactly what we're going to talk about here every Monday, Tuesday, Wednesday. We're going to talk about what we don't do. All right, what do we not do? We don't trade on hope. We don't trade on fear. We don't trade on greed. We don't trade memes. We can trade meme stocks all day long, but only if they hit our rules-based patterns. Okay, so that's what we don't do. The best thing that happened to me at the American Stock Exchange is that I met my mentor. All right, my mentor, who became my partner, who became the co-founder of Optionetics along with me, George Fontenilles. You want to know what this also meant? This also meant that I started to learn the first lines of code of what a real rules-based trader is. All right, which takes us to, first lines of code back in the 90s, which takes me to the first few lines of code of something we call quantum scripts. All right, now I'll talk about quantum scripts a little later in the program. But what I want to do is I want to take you through how I started with a very, very simple, you can see it on the screen, you can back test it if you have the data. And by seeing a rules-based trading strategy and back testing it, and by the way, there's something that I have in common with all the other folks here at Money Morning Live. We don't win all the time, folks. All right. We strive to win all the time. We don't win all the time. Okay. But when I, as a pattern trader, see the same thing happening over and over again, it gives me the confidence to go in and pull the trigger on the next trade. So let's talk about what the very first what I like to call rules-based trading strategy that I learned, which is called moving average crossovers. Very simple, very easy to understand. And guess what? Some of these actually work. Okay. And you might say, well, how? Because you have all these, we have all these folks we're fighting against. We're fighting against the computers, the rage against the machines. And I'm talking about high frequency trading. We've got, we're trading against teams of professional quant traders, that work at the likes of Goldman Sachs, right? So how do we step in and become profitable traders? It's if you find a rules-based trading strategy that works over time, then you can go in and grab what's yours and claim what's yours. So moving averages, just to get your juices flowing on something that's an easy trading strategy, is you take two different moving averages, and what do you do with them? You put them on the same chart. You're going to have a short-term moving average, which is more reactive than a long-term moving average. And as these gyrate up and down, they will crisscross and they will create bullish and bearish signals. Now, let me tell you where you put these. You put these on the most volatile stocks in the market if you want to tame the moving average cross. So it works in bull and bear markets, as you can see here. Here's a crossover where the short-term crosses above the long. And then the market rode it all the way up, did a two-step, got a short signal here, back down, long signal once again, and then back up. What does this not work on? It doesn't work on stocks. They're what I like to call beta stocks. Okay, it works on alpha stocks. Those alpha dog stocks, you hear about them all the time. They're moving around a lot. That is where you catch these. And this is what we call a trend trading strategy, right? The longer the signal's on, the more it's working, the more profitable you are. The shorter the signal's on, the more likely you're getting whipsawed in and out of it. So this is something that, again, works in bull or bear markets. We can, commodity ETFs as well. Even the VIX from time to time, although I don't think it's the best thing that works on the VIX. In fact, if we were to take a moving average crossover like the 1030, let me show you all the signals that came up recently on a 1030 moving average. By the way, this is what are we looking at? All optional stocks and indices. And I ran this just before we jumped on the show. And so you can see here, look at all these stocks. Here's, by the way, here's DBC. DBC is the Deutsche Bank Commodities Index. Okay, so if you want a quick picture of that, this is what it looks like. There was a nice run up on this 1030 moving average cross, and then the sell signal kicked in, and it dropped down. Look, we just got a buy signal today. Today, a buy signal on DBC. Right. So if you believe that the dollar has run out of steam and is going to start to drop back down, and that stocks and commodities, especially commodities, are likely to move higher, then this might be a good signal for you, right? This particular stock is trading around just above the $26 area, right? So call it 26, right? 100 shares is going to cost you $2,600. Options would cost you less, but that's DBC. And that's just one of, look at this. Eric, I'm in the hundreds. Here we go. We're passing 200, 300, 400. By the way, I only took the first 500 signals. There were more than that. So how do you drill this down to just the signals that are important? How do you get this down to something that's worth trading? All right. Remember when I said that moving averages are just the first line of code. First line of code in many lines of code that we call quantum scripts. So, Eric, let's fast forward. All right. Let's fast forward to our latest QDP closeout. And the reason I want to bring this one up is because all of you in the room had access to this information. The reason why is because I got to give full credit to my partner, Joe Contes, who was here last week talking about Nucor. Does anybody in the room? Does anybody in the room remember Joe talking about Nucor and talking about trend trading and talking about the quantum data bull that was in front of you? And I believe he also talked about a free trade that we had thanks to a 100% closeout of the first half of this trade. So here's the update that went out, just in case those of you that were here last week heard Joe and are part of our quantum membership. So Eric, take it away.
All right. It says good news on your NUE $135 long call position. It was good that we moved our stop up to $12.50 on the long call position, which was hit today. It's now trading at $11.70. Remember, this was a free trade since July 29th when we closed half of the position at a 100% gain. If you guys recall, last week, Joe went over that in the main room, talking about what actually made it a free trade. Defend your fills. Depending on your fills, this trade returned 167% in 16 days. Way to go, Quantum Scripts. Looks like a winner to me, Tom.
Yeah, and you know what? I want to bring up Nucor just for a moment, because if you take a look at the chart of Nucor, we can look at charts a number of different ways. A couple of things that ended up happening here, all right? Number one, they did have a positive earnings announcement, and although the stock dropped the day after, it quickly recovered. Also, you had a multi-month high over here that we had jumped above just a few weeks ago as well. But do you see this is July 28th? We were already in this trade as it jumped up and we closed half the position out right here. So we were in this trade just right around the earnings mark. Then we were out of half of it right here. And you can see what's happened since then. It's ran the gamut. So where are the first two lines of code? Well, the first two lines of code were that simple 1030 moving average. Just throw those up. Like I said, we had hundreds of 1030s. Why Nucor? Because Nucor passed not only the 1030 test, but again, that's the first draft. All right, we go through, we redraft. We have other scripts that come out after that. But take a look at this. Take a look at this move. You got that nice move where we jumped into Nucor literally the day of earnings, day before day of earnings, and it just really just bolstered its stuff right after that. So that's part of it. But there's so much more that you're not seeing. Right? We could go in and say, all right, what's the percent change look like? Percent change would come down. What this basically means is that we were getting negative percent changes, but they became less and less. All right. What else? Volume. There was a big volume spike way back here in May. All right. That's when we ran up the first time. But look what was happening coming into earnings. We were starting to see volume getting higher and higher, meaning that there was a breakout that was likely to occur. All right. Ever since the middle of July, our MACD turned positive. That's a good number too. Bollinger Bands were expanding, meaning that guess what? This was acting more and more like an alpha stock. I could go into so many different areas that we could get into when it comes to quantum scripts. But again, what it comes to is one of the biggest reasons that we found this trade and it made sense is because look at the stats. Bring the stats up on quantum. So in the last 2 years, folks, all right, because this is what the back test reveals to us. 5 of the last 8 trades were winners, okay? The average risk to reward was more than 6 to 1. So on a $500 risk, you averaged $605 in the profitable trades, and the only loss was $99, which made your ROI about 123%, okay? This is what the data looks like when quantum feeds it to us. So I know this is a little bit small when you're looking at this. So Eric, throw that piece up there. There you go. This small is what we see.
Small and blurry, Tom. What's important here, though?
Yeah. But you can see, I mean, math expectation coming in at a 340. That's a great number. Okay, return on investment. There it is, 122.68%. And then you can see average dollars in 605, average loss $99, 6.1 to 1. These are all the things that we look at when we're evaluating Nucor or anything else as a potential future trade. So it's not, the 1030, the moving average crossovers are literally the first 2 lines of much of the code. We show those to you because what you need to know is that what is quantum scripts? It is a trend trading strategy. The longer that we're in, the better we do. That's why we do the partial closeouts, folks. And more importantly, what we're finding is the longer and longer that we see the trends start to work themselves out, the more and more we're going to be leaning into longer term options. So, you look at Nucor and you think, wow, what could have made Nucor better? Adding more time to it, which is something that quantum scripts will go through and realize, and it will start to adjust and say, you know what? Market's back starting to head higher a little bit. Volatility starting to cut down a little bit. So we need to push our expiration dates out a little bit farther when it comes to options. Now, I mentioned that, but I also want to mention, that this is a stock. This is a stock market, or we call this Stock Pattern Monday. So I want to bring up that QDP signal as seen on the chart. This is what went out to our Quantum Data Profits members. So this chart looks a little more easier to read. And the reason why it's easier to read is because you see all that green over on the left-hand side, Eric?
I do. I like green.
This trade is cut in half. And you've got green on one side, you got red on the other, but then you got a little bit of green there at the far right-hand side. We'll get to that in a moment. The green on the left-hand side was the last bullish signal that came in on QDP. Now, we saw a bearish downward trend on QDP also that took up much of the chart. But look what happened. This is what really jumped into the second round and third round and really made this the pick. That most recent close we had in Nucor is that we had that bullish trend cross. We had the noise filter that was added. It hit channel resistance. That was a channel resistance test. All of that came together to give us this signal. It gave us a really powerful play on NUE to the bull side. So it paid off for anyone who bought the stock because the stock's significantly higher. You look at where the stock's trading up, it's easily 10%. 12% higher than it's trading the day the signal came out. So if you're a stock trader, congratulations. I mean, there are people that are watching us right now, Eric, that may never become option traders. Why should we not show them stock trading patterns, that they can take advantage of? And Nucor was one of those, just buy the stock. I'm going to show you another stock pattern before we're done today. But if you're an option trader, we had a high probability trade and we had a high profitability trade. Both paid off. So, Eric, I mean, that was a great lesson to learn last week for folks that were looking at a trade like a Nucor. Now, I want to show everybody. Let's tap in and look at a couple scans, and that's going to take me to the stock that I'm watching here today. All right, as we close out the last 5 minutes of our time together. So you guys all remember, I showed you that 500 trades, 500. And that wasn't even all of them, Eric. I had to cut it off at 500. But we had 500 signals that occurred recently. When I say recently, this was in the last week or so. But when I ran this through quantum scripts, 500 became a handful, and a handful became two handfuls became one handful. And these are the three that popped up, all right, that popped up and made the quantum screen. This was coming into this morning. So we had AutoZone that popped up. We had Ren, and this is Ren, and then we had Arginex, all three of these. One's motor vehicles, one's amusement and recreation, one is miscellaneous investing. So all three of these have nothing to do with each other, all right? What's going on with these? Well, first of all, the beta on these. Now, when I say a beta stock, I mean a stock that moves very little. These stocks move around a pretty good clip. Two of them more than the others, and one much more than any of those. But when you see a beta relative to the S&P, what this tells me is, well, if the S&P is going up or the S&P is going down, if this was a 1.00, Eric, it tells me it's moving lock and step with the S&P 500. But the farther away from one we go, the more likely it's going to move unto its own. So it doesn't care so much what the S&P does, or the Dow, or the NASDAQ for that matter. And so all three of these, got a 37, 0.37, 0.23, 0.39. It means that this is moving 0.37. It means that maybe 1/3 of the time it's moving with the S&P. 2/3 of the time it's moving either against the S&P or it doesn't care what the S&P is doing. That's great because that means that you don't have to worry so much of whether the market's bullish or bearish at the time. So that's a good thing to look at, right? We got stock closes. We got, a couple different things we can look at here. Return on investments. All right. So now I'm looking at something when I go back in time and I see, all right, this is important, days to expiration and days to earnings. All right. And these are things where I'm looking at stocks that are expiring. Look at this. Return on investment, 90%, 72, 33. Okay, maybe we can drop that one off. Let's focus on these two. I got one that had the last 5 trades, 4 of them were winners. That's an 80% win rate. Last 4 trades, 3 of them were winners. That was a 75% win rate. Okay. Total back-tested profits on number 1 is $27,299. All right. Shows the back-tested profits or the max and the maximum loss. Here we've got a maximum total profits of $1,334. Back-tested profits of max was $800. Loss was $164. Okay. So let's go ahead and move all the way to the top. And let's look at AutoZone. Because of the 3 I'm watching today, Eric, AutoZone, RenRen, Arginex, they all have great setups. They all passed first base of the quantum scripts and a rounded second and even gotten into third. Right? But if I were looking at one of these today that I was interested in as a quantum stock, then AZO has to be the one. And in fact, Eric, I want you to put up the detailed information for AZO for everybody to see. So that detailed information, and I blew this up so it would not be blurry. All right, we blew it up so that you can see all that pertinent information. Now, the stock was actually profitable 100%, but when it came to looking at a trade-by-trade piece, then you've got 80% there. Remember, I told you that we had 5 trades. That was 4 and 1 on the number of trades. But look at the math expectation in this, $4,531. Look at, at that max profit we looked at, max loss we looked at. Those look great. That average profit to loss looks great. The reward to risk ratio, I mean, are you kidding me? 21 to 1. That's insane, right? So when we look at everything, 80% winners, 21 to 1, and it's hitting new highs. This is hitting new year-to-date highs, folks. So AutoZone, what's the play? Buy it at current prices. What's to sell? All right, well, we're going to talk about that later this afternoon in the Quantum Data Profits room. But again, folks, you know what the sell is if you're a quantum member. We know what the sell is. What about options? Well, we'll talk about options, okay? If you want to be part of Quantum Data Profits, which is really an idea of getting into trend trading, then you got a link on the screen. Check us out. Get a hold of Gabe. You can get a hold of him by phone or by just text, all right? And ask him any questions you have about Quantum Data Profits. We have a special members only session that's starting up in about a half an hour. So that's what we got going on today. Also, I'm going to be available for those of you that are part of Trade to Close, just like Voz says. I will be back at 3 o'clock with my Trade to Close pick. All right. I think you'll be, let's just call it a confirmation of something somebody else was talking about on the show here today as well. All right. So there you go, guys. AZO is the stock that I am looking at here today. Tomorrow, we'll be getting into all things options. So for everybody else, if I don't see you later today, I'll see you back here, same time, same place tomorrow at noon. Garrett's up next. We'll see you then.